Hello. How's everybody doing? Everybody's coming on. All right, this is like meeting format. So everybody, you're more than welcome to unmute yourself at any time, turn your video on, say hi, introduce me. All right, so I like to get to know all my investors, face to face ish, Zoom to Zoom ish. And so I set this up as just like a meeting format so that you can say hi to me. So I see somebody sitting in the dark there. How you doing, Jay? Sitting in the dark. Hey, who said hi?
This is Ann Taylor.
Hi, Ann. How are you?
I'm doing well. How are you?
Good. How have you been?
I've been doing pretty good. Busy, but other than that, doing well. Looking forward to hearing some more about storage investing.
Okay, good. Okay, good. Anybody else want to say hi? Well, you're more than welcome to say hi, introduce yourself at any time. What I'm going to do today is I'm going to just introduce myself. I'm going to go over the fund and like what the offering is. I'll show you how to get into the portal. And then also we'll go over the financial model a little bit so I can show you how to use it. Okay, so that's kind of what we're going to do today, is just kind of give you an overview of the fund and what we're doing. Now, we have 2 facilities in the fund right now. We closed on one October 19th. That was our first facility, doing great. And then our second facility is we just closed on last week. All right, so we've got 2 facilities. Now we have one more under contract that we need to close, hopefully by the end of the year if we can. But if not by the end of the year, then we can close in January sometime. So I always go directly to the owners and I meet the owners and talk to the owners. And when I do it that way, like they're just so like nonchalant. They'll just close whenever. Really easygoing. They just know, and they all know that I'm just trying to raise money, because I really kind of just introduce myself, let them know who I am, get to know them, meet them. And so we have one under contract right now, which is in Carrollton, which is right outside Atlanta, kind of like a suburb of Atlanta. And the owner's really, really nice. And I just told him, I was like, look, we just closed on a facility last week. And we really need some extra time to like raise the money and just like, be able to close, because it's just me. It's really me and my husband. And my husband, his name is Pete. We're the asset managers. But my husband, so the fund is set up so that we close one storage facility a quarter. And we set it up that way because really that's kind of all we can handle. So we split our business up into find them, fund them, run them. And I find them and I fund them. So that's why I'm here pitching to you guys now. And my husband runs them, right? And then he has like all his team underneath him. He has a great team underneath him that kind of manages everything. But it takes about 90 days to onboard a facility. And the onboarding process for us is like getting it ready for closing. Right, so everything that you need to do in order to get it ready for closing, and there's a lot of stuff that you got to do. And then also right after you close, the next 90 days, which we call like transfer, it's like transfer ownership stage is really what it is. And that's also like a lot of work. So internally for us, just getting a facility onboarded and then also closing on it and getting it up and running. I mean, that's really like a 6-month process. It takes a long time to do that. It's just not, people say like, people are like, yeah, I just buy like whatever I can. Like, we're just not like that. We're slow and steady wins the race. We want to make sure that we're managing everything properly. My husband and I are super like system oriented. And so, we just don't want to be, we don't want to be like overwhelmed, right? And so Joel is asking how many people does P have on his team and how many storage teams I have. Okay, yeah, so we have 13 storage facilities total. We own personally 11 of them. And that goes under the Miss Lillian self-storage brand. And then we have 2 now under the fund. And the fund is the Self-Storage Fund of America. And that brand is called Mission Self-Storage. And I'll show you the website for that here in just a second. And then underneath him, he has Bonnie, who's worked with us for 7 years. And Bonnie is amazing, awesome, and asset to the team. And then also, and she does like operations. She's really kind of like the person that really manages everything. And Pete's kind of like high level. And then underneath Bonnie, we have Christy, and Christy is marketing. So she does like she works with like our Google Ads person. She does all the Facebook social media stuff. She does like the signs, and like she's like marketing is what she is. Okay. So that's Christy. And she's been working with us now for like almost 3 years. And then under Bonnie as well, so Bonnie kind of like manages everybody. Under Bonnie is Steph and Mark. And Steph is like Monday through Friday phone person, and Mark is on the weekends. Okay. And then we have like an answering service that answers in the evening time. If it's an emergency, then Bonnie will take it, something like this. And then we also have all underneath Bonnie as well is like all the boots on the ground people. And the way that we split it up, so we have all of our facilities are between Georgia and Florida. So like the northern part of Georgia all the way into the panhandle of Florida, there's 13 facilities. And we split them up into like mini portfolios. So we have like the Panhandle, and we have like a boots on the ground team that really handles the Panhandle plus like the Valdosta kind of area. And then because we have one in Valdosta, and then we have like Central Georgia, and we have somebody that handles those, a boots on the ground person that handles those. And then we also have the Atlanta portfolio, which is like 4 facilities, and we have a boots on the ground person that manages those. And then we have the North Georgia, and there's like a boots on the ground person that handles. We have 4 boots on the ground people for all of our facilities. And as we grow, obviously, add more units, then, it'll be switched around. It'll be changed up and stuff like this. And they all, like, what they do is they go to the property and they, clean like out the units when people move out. If somebody leaves trash, they pick up the trash and stuff like this. And then they also like overlock if somebody's not paying, and like, they'll put like the sign up if we're going to do auctions and stuff like that is what they do. So that's our boots on the ground people. And so Matt says, does it matter when you contribute funds for investment? For example, can you do a few contributions throughout the year? No, yeah, you can do. I can take money from an investor. Like your initial investor needs to be before August of next year, and then after that, you can put as much money as you want into the fund. So the fund is a 5-year offering, and but the closing of the fund is like the end of September next year. Okay, so we have 1 year to raise. Actually, we started like March, and then so like March until now we've raised almost $1.6 million, and then we'll raise as much money as we possibly can until the September. The goal is to raise $100,000 a week from now until September. And then we'll be able to use that money to buy property, and we'll buy next year 4 to 6 storage facilities, depending on how much money that we raise. Okay, so that's kind of how it's working. And you can contribute as much money as you want now, and then later, if the fund is going good, you can be like, look, I want to put some more money in. You can do that as well if you've already done your first initial investment before like like August of next year. Okay. That makes sense. Good. And ask any questions that you have as well too. So let me pull up the one more question. Let me make sure I get that. Is there a minimum investment? Yeah, $25,000 is the minimum investment. But remember, this is a 506c fund, so you have to be an accredited investor. So that means you have to have $1 million in net worth, or you have to make at least $200,000 single, or $300,000 married or jointly filed on your tax returns. Okay. And you can prove that like in any way. You can show us like funds, or you can like give us like there. People are showing all kinds of different ways of proving it. Okay, but you just have to show something to our fund manager. His name is Adam, And he's the one that kind of manages that. You'll send us that and then we put it into a file and he'll manage all that. Now we are going to have for all investors, because I see like, you know, a couple of people here are already investing in the fund, and you can hop on at any time during the Monday night pitch. And I'm giving everybody an update as we go along. I'm just updating you on what we're doing. So this can always be like the update, weekly update meeting that you want. Or if you need to just meet with me one-on-one, just let me know if you have any questions and we'll just schedule a Zoom meeting and I can just hop on Zoom and just answer your questions. But we we are doing quarterly investor meetings. All right. So this is our first quarter that we've like finished. Well, actually, we bought our first facility in August. So end of September was really the first quarter. So we have like 1 month, right, of like quarterly report to report, right? So quarterly update to report. So we're in the process of finishing up our quarterly report, and we're going to send that out to all investors tomorrow, probably. And then on Thursday at 6 o'clock for all investors, we're going to invite you to just like an investor only meeting. And then we're going to get into like how the properties run. So my husband, Pete, will be on and he'll talk about management, and Adam will be there and talk about his thing. And also Chris will be there. Chris is our bookkeeper and he'll talk about the numbers, and we're going to go through everything and show you. So that's going to be our very first investor meeting. So for anybody that, you know, joins, you know, if you join this week and you can give some money this week, then you guys can hop on to that as well too. You can get the insight of what's going on. Yes, and then somebody asked, can people from outside the U.S. invest? Yes. All right. So we have people from outside the U.S. as well that can invest. And let's see, we cannot do tenancy in common. We can't do 1031 exchanges, but we can have you know, 401ks and IRAs and, you know, custodians or anybody outside the country that wants to invest as well. Okay. All right, so good. Now let me share my screen and let's get into, let's just pin this so it's out of the way. First, I wanted to get to the website. And this is the website. So I'm going to put this into the chat. It's the Self-Storage Fund of America. And not to share, I need to go to the chat. Where's chat? There it is. Okay. I posted this so you guys can open this up, this link up. Now, everybody should have access to the PPM. If you don't have access to the PPM, just click on this, and then you have to basically ask for access to the PPM by filling out the account information. And then after you ask for the access to the PPM, you'll be able to log in. Let me see if I can log in. Yes, good. And then this is where you have access to the dashboard. You'll be able to see, you know, you'll see how much money we'll be able to we're raising. And then you'll be able to have access to the PPM, which right here you can say read the PPM. So you view that, and this is where you can read the PPM and just go at it. 102 pages of just awesomeness here. This is like the Bible of the fund, right? So this is all the rules. This is what Adam, like our fund manager, like this is his Bible. I mean, he's reading this and he's like going through and making sure he follows this to a T. And there's case studies, and there's like all, you know, the rules, the regulations, how much, you know, money, you know, I've made, everything about me personally and my husband. These are all the properties that we've owned, or, you know, over time. And but also the operating agreement is in here as well too. I like to make sure everybody can see that. You see, here's where the operating agreement starts, and this is where, you know, you can read through if you want to read through that as well. Okay. So that's there. So that's where you can read the PPM. And also you can get into supporting I went to I'm kind of fast, documents, right? And then I went to supporting documents. And this is where you're going to be able to find everything that we're going over. I like to put it to 100 right here. Like I just changed it to 100 so you can see everything. You can see updated financial model with investor projection tab and slides is right here. So I'm going to download that so I can show that to you guys today. And I'm also going to like we put in an example of the subscription if you wanted to read it, but you can also see it electronically. I'll show you that. And let's see who does. Max is the facility that we just closed on. So I'll show you that here in just a second. Here is a video of Adam, our fund manager, going over the financial model. So if you really want to like learn how to read this and stuff, then this is a video for you. Okay. American Mini Storage is the facility, the first facility that we bought. Okay. So that's the one that we're going to be going over in the meeting, because that's the one that we have the data on. Max, we just closed on last week. So like, we're just getting it up and running is what we're doing. All right, so that's basically what's in the supporting documents. The quarterly report will be here once we publish it, right? Any financial documents will be here as well. So this portal is going to be for you. We update latest news, right? So you can come in. So we just closed on facility number 2, just came out. This is it. Look at that beauty, man. Look at that awesomeness there. And so we'll keep, every month we'll just keep, if something happens, we'll let you know what we're doing. Okay, so kind of just give you a little update. And okay, good. So now let me get into let me get into the presentations right here. And this is our deck. This is our deck, and this actually is under supporting documents as well too. If you wanted to go through it, you can. There's a couple of slides here that I like to just go over real quick, just to give you the offering characteristics. Now, this slide right here really explains like what we do. So we are like, we buy mom and pop facilities. Like we're typically in tertiary or secondary markets. Okay, so we do not buy facilities in primary markets. We don't buy huge big facilities, 25,000 or 25,000 or less. Typically 10 to 25,000 would be good, or maybe let's say 15 to 30 would be good, but the price is really the most important thing. The price is like $3 million or less. And also really the price is like, can I, 3x this property? That's the question, right? So for instance, we just closed on Max, which is the one that I just showed you. Let's see if I could, yeah, here it is. We closed on Max right here. This is Max Self Storage. It's in Macon, Georgia. And if anybody doesn't know Macon, Macon's about 150,000 people. So it's a big city. And this is kind of in an area south of Macon. And this facility is really kind of just the ugliest facility in Macon, honestly. It's just not looking good here. He painted some of it, he left some of it, and he made his own signs, and just, it's 171 units. 171 units, this thing, on 6 acres. 6 acres is where it's at. And so it's got a lot of room to grow. And you could see that. I mean, it's in like Dawsonville, but it's like a little tiny town right south of Macon. But within a 10-mile radius, there's like 160,000 people. So I mean, it's in a very populated area. And yeah,
is expanding part of the plan on some of these already?
No,
not really.
Honestly, we don't really do expansion because it takes too much time. But really, we like to leave some meat on the table. Because what we do is we stabilize the properties. We come in and we really stabilize them. So we buy mismanaged facilities. These are properties that are severely like mismanaged. And so this one, like Max, it's making $1,000 a month and it's 171 units. Okay. And so it's on this property here, like it's kind of a triangle, but then it comes up. It's like this huge, big property. It's like this weird kind of like, I don't know, like axe shape or something. And then there's also like a big area right here in the front. Let me see if I could pull it in. But you could see this area, and then there's like this area included as well too. And there's like a big area of parking right here. But like we don't do development. We just don't. That's just not like what we're good at. We've never really developed before. So we want to do what we're good at. We're good at stabilizing properties and then either selling them or refining them out and holding them. That's kind of what we're good at. Okay. So yeah, so this is what we're going to do. So this one here, and you can see there's a storage facility right here, Max Self Storage. Oh, sorry, Matt, is that Madsen? Macon Storage Center is right here. This facility is actually for sale for almost $2 million right now. This one. All right. And this one, and ours is bigger than that one. Okay. So, and plus it's got all that extra room to grow, and this does not have any room to grow. It doesn't include any room to go. So you can see kind of like we bought this for $375,000, this property, $375,000. It's 171 units, 25,000 square feet, and it's on 6 acres. Right. So, I mean, the owner was just running this thing to the ground, and he really tried his hardest, but it just wasn't working. Really nice guy. He's just like, I'm ready to let this thing go. You can see that we bought it for $375,000. It's making $14,000 is what it's making. 92 of the units are usable, and it has 171 units. So the rest are not usable. So another 80 units or so are not usable. So like it needs new doors. Maybe there's like, he took out a lot of walls, and like he took out a lot of walls, and I think he was trying to maybe make them bigger or smaller, but then he just like never finished the project, right? This kind of a thing. So we have to come in, we have to really finish it up. We're going to paint it, make it look nice, put a good sign. It's right on this like busy road. He was like, you could put like an amazing sign because it's on this major highway right here. But he just never did that as well. But it's totally fenced in, and it's got a gate, and it's got a keypad. And so, so it's got a very good like security system, but that's it. That's really all. That's like the best thing going for it. And so you can see here that he's at 66 cents a square foot. Now, what we did is my husband, he drove over there and he went to every single facility. There's one here, and there's a couple over like here. There's like 4 facilities within like maybe a mile radius. And he went to every single one of the facilities and like pretended like he was going to rent a unit just to see, kind of how they run and stuff. And they're all like, he's like for a 10 by 10, they're $85. And actually all of them 10 by 10s are around $85. And so we decided to just be lower them. Once we get it cleaned up, we'll be at 78 cents a square foot. And that's kind of how we run our numbers, is we look at like, what is the competition charging for a 10 by 10? National average right now is 88 cents a square foot. And so we'll be a little bit lower than national average at 78 cents a square foot. So you can see we overpaid for the property. We're buying it at a -2 cap. We put $200,000 of CapEx in. So I raised 500. I raised almost 600 grand in order to buy the property and have money to fix it up is what I did. And then, so we bought it. We overpaid obviously for the property, but once we get it to 78 cents a square foot, which is going to take us about 18 to 24 months. So keep that in mind, because I buy mismanaged facilities. It takes months for us to get these things up and running to where they're turning a profit. So, this is not a fund where you put your money in and then immediately you're going to start making, getting a distribution in 3 months or whatever. So I always tell all my investors, like, now the first facility that we bought, it was an income producing property. It was supposed to be making, $25,000 a month. It's making $10,000 a month. So it is making money. So it'll start making money after the second quarter. It'll start making money, but this one is going to take longer to make money. So the distribution is going to be farther out. So I told Adam, and I'll show you the financial model. I told Adam to run this one at an 18-month. Actually, we're running all of our funds at an 18-month distribution. But you will start making distributions from other deals that we do, obviously, because not every single one of them is going to take that long to get fixed up. We'll definitely buy some that you can make money on them then, but you have to know that a lot of them on the back end is where you're going to make a lot of money. Okay, that's kind of the thing, if that makes sense. All right. So yeah, so you can see that it's it's coming out to a 23% cash on cash, 23, almost 24% cash on cash return once we get it up and running. Okay. And that's without refining it out. All right. So when we run our numbers with a refi, and I'll show you that in the financial model, it comes out to like 80%. Okay. Something like that. But, you know, in the fund, we'll have like, you know, 6 different facilities and 6 to 8 different facilities, and some of them will refi out, some of them will sell, some of them will, we'll distribute the money to, and some of them maybe we'll use some of those funds to go buy another deal, something like that. All right, so just keep that in mind. This is an ongoing fund, and over the course of the next 5 years, the money can be used to either give you guys a dividend or to buy another deal. You know, if we can find something that's like this good, you know, because we're taking a $500,000 property and turning it into a $2 million property. So it's a 24% cap rate is essentially what it is. And we ran it at a 7 cap. All right. The market cap rate is at a 7 cap. That makes sense to everybody. So actually it's a really good deal. It's just that we need time to get it fixed. And that is really the purpose of this fund. Just so everybody knows, like these types of deals I come across all the time, and it could be 375,000 or it could be $1.5 million. All right. Or it could be, you know, 1 million or 2 million. So I don't know how much they're going to be. The fund is run on $1 million property, typically about, you know, $1 million properties. That's kind of how we set the fund up. You say, okay, on average, the properties are going to be $1 million, but it could be 500,000 or it could be 1.5 or $2 million as well too. The goal is that we can like 3x the money, right? So for instance, the Blairsville facility that we closed on in August, we bought it for $1 million and it's worth $3 million, right? So those are the type of, our targeted IRR for this facility is 19%, right? 19%. And so I won't buy anything. I won't put anything into the fund that's less than that, just because this number right here is really based on all the properties that we've bought and, you know, and stabilized in the last, in the last 6 years that we've been doing this. This is where that number came from, because the consultant that we hired to put the offering together essentially looked at everything and said, okay, this is like where you're at on average. So this, I think, is going to be a good number for us to use in the offering. Okay, if that makes sense. So it's a 5-year offering. We'll raise up to, almost $8 million. And it's a 10% pref, right? So whatever money that you put in, 25,000, 100,000, and I'll show you that in the financial model, you'll make the 10%, right? And then after that, we have, what's called the hurdles. And essentially the hurdle is that I need to be making above 15% IRR in order to get 25%. All right. And I want my 25%. So that's why I need to make sure my targeted IRR is above 15%. This max deal is a 33% IRR. And then the Blairsville one is a 20% IRR. So we're at 24% IRR so far. And, and I'll continue to buy properties like this is what I'll do, right? That's kind of how we look at it. And, yeah, so let's see. And then let's see what else. Oh yeah. And then we are putting 4% as a co-invest in. So we are putting money in as well too. So that leads me to show you this little chart here. And you can see that we have a 10% pref. So if we don't make anything any more than 10%, then the split is going to be 96.4. 4% for me putting the co-invest in, and then 96% for you guys to split. Okay. If we make anywhere from above 10 to 15%, then it's a 76-4-20 split. So that's 76% to y'all, 4% to us for co-investing, and then 20% for the promote. Okay. And then, but the goal obviously is over 15%, because I want my 25% promote, and then we'll get the 4%, and then you guys will split the 71%. Okay, so this is ultimately the goal here, and we'll pursue that. And then, so this, and we do have development fees in here just in case we end up developing. I say most likely we won't, but hey, you never know. Never say never, right? But we don't run our numbers on that. So you could see, like, we're running our numbers like as is with this property right now. What could I make? Can I 3x the property? So like, we will never buy a property where you have to build in order to make money. We would never ever buy that. Like, we need to be making money off the property that's there right now. That's kind of the way that we look at it. And then if we happen to develop, if we want to, it's like, oh yeah, I mean, this is a great deal, let's add some more. We could always do that. And we put a little bit of fee in there for that. But other than that, there's like only two fees, a management fee and an acquisitions fee. And the management fee is 0.625% on a yearly basis. And the acquisitions fee is 0.50%. Okay, and that's a one-time fee. So those are the only two fees. All right, and this slide deck, like I said, there's all kinds of information about our strategies, you know, how we manage things. You know, we're very hands-on. My husband, I mean, he's leaving on Tuesday and coming back on Saturday. He goes and he does his thing, and he's going to go, you know, clean up, you know, storage facilities and stuff like that. So we're super hands-on. Right. So we are true asset managers. Like, we don't get a management company to do stuff. Like, we just do it ourselves. That's just kind of our personality. All right. And okay, good. So there's that. And yeah, so I went over the this will be in under supporting documents as well too. So just click on supporting documents, and here's the presentation, investor presentation. So again, if you have time, watch the video from Adam. You can look at the executive summary or the information on Americas, which is now Mission Self-Storage. I forgot to show you all that. So Mission Self-Storage is the name of our brand. So the fund is Self-Storage Fund of America, but this is it. So Mission Self-Storage Blairsville is here. And then Mission Self-Storage Macon will be added as well onto here. So there'll be another little slide here that says locations, and it will drop down. It looks kind of like this. So Miss Lillian's is where we have our 11 facilities. And you see you have choose your location, and you could just choose your location. So it'll look exactly kind of like that, but right here as well. Okay. So you can check out Mission Self-Storage. You can check out Miss Lillian's. You can come into the portal and you can look at like all the different documents that I'm showing you now. And then also the financial model. And I see, yes, Matt says 19% that's the IRR. Yes. Okay. Plus, let me show you, Matt, the financial model. Okay, so you guys can see how much money we're going to make. Okay, so let me pull this up and make sure that it's ready. Okay. So this financial model is in the fund, right? And it's here, right here, where it says, wait, hang on. Go to 100. There it is right here. Updated financial model with investor projection tab and slides. This is the one that I downloaded. This is what I'm going to show you right now. So this is what everybody here should do this. And put how much money you're thinking of investing into this tab right here. Okay. So you can see there's a whole bunch of different tabs at the bottom. And this is going over like Mission Self-Storage, Max, and then Able's the one that we're going to close on in January. And so this one here is, so you can put in, like, let's just say you do want to put $75,000 and you can put this in yellow. All you have to do is two different inputs. One of them is the date that you're putting the money into, right? So let's just say that you put the money in here. All right, so I'll put that there, and that changes. Then you put how much money we're going to put $75,000 in. So as of this date, we put $75,000. And then this is how much money on the date that you're going to be making everything. Okay. All right. And it kind of shows you how much money you're going to make. And then also it shows you the slide here will come up and it will kind of show you how it is. Now, this financial model is based on these three, essentially Mission Storage Blairsville, Max Self-Storage, and Able Self-Storage. Okay. Able's the one that we're going to close on. We were supposed to close on in December, but we're going to push it out to January. I talked to the owners. He said it's fine. And I'll give us a little bit more time to just raise the money and just get ready to close it and stuff. And so Mission Self-Storage and Max are like really kind of the two that we have now. And then this one here. And we're going to update the financial model like tomorrow for like the new stuff. Because when we meet you guys in the investor meeting, for anybody that is actually an investor, we can meet you on Thursday for our first, quarterly investor meeting, and we'll go over really everything that's going on in the fund, so you guys could get an update. And it'll all be updated because we haven't updated this one yet because we just closed on it last week, so it doesn't say sold yet with the dates on it and stuff. But yeah, because we closed early. Okay. Anyways, so the fund is this is the fund level cash marks. This is like the main level of the entire fund. And as you can see, we have the 3 that we're working with, and then we have also 4, 5, 6, 7, and 8. All right. And 4, 5, 6, 7, and 8, these are all basically averages of the 3 facilities that we have here. So it's based on those 3 facilities. All right. And remember that this fund is like, it'll be ever changing, right? Because we'll be getting facilities in, stabilizing, selling them, refining out. Some will be held, some of them won't be held. And so this will be ever changing. So basically on a quarterly basis, we'll just update the model and let you know like where we're at. And then you can always download this model and put your number in on here on, how much money you put into it and what date you put into it, right over here. And then it'll show you kind of where you're at and, what you should be, projecting. And then, Adam, and we had a very extensive meeting last week and kind of really updated all the numbers and looked at everything and sat and did it. So we'll have that all updated by this week so everybody can take a look at it too. But it's still kind of good. It's going to be the same. I mean, nothing's changed a lot.
That IRR is quite different than the average. Is that just because those 3 properties are different than you expected, or
no, because this is actually based on us refining every single facility out.
Okay.
So yeah, so the exit strategy that we're using is that we're going to be refining these out. So as you can see, like if we went to Mission Storage Blairsville, and you see we bought it for $1 million, and this is the equity in. All right, and then the uses is like all the acquisitions fees and costs that it costs. So this basically is how much it costs us to close on the deal. And then this is the interest rate. Interest rate. This is the expenses. These are all of our expenses and what we're like. This is what it was making when we bought it. It was at 137,000, right? And its NOI was 44. And after 12 to 18 months, right, it's going to be at 263,000, right, is where it's going to be, right? Because this one, like, he was making less than $10,000 a month. He was charging $20 for 10 by 10s. That's what he was charging. So Matt, I know you have experience. Like, he was charging $20 for 10 by 10s, this guy. And we came in and we're now charging $100 for a 10 by 10, right? And about 20, like we raised the rents and about 20 to 25% left. All right. So obviously, because they're like, what? But the funny thing is like there is no storage. Like we only went off like what everybody else is charging. That's it. Like our rent in that area, it's $100 for a 10 by 10, and nobody has any spaces. So they'll maybe some people will find 1 or 2 and move in and stuff, but a lot of people they won't move. I mean, we raised the rents from $20 to $100 and only 20% left. That's crazy, right? And one guy even told us, he's like, we got away with that. We got away for a long time. He's like, I can totally understand, that the manager, that everybody's raising the rents because we got away. That they all know they're getting like really good deals. They just never say anything. You know what I'm saying? So anyway, so this is what he should be making. This is what he should have been making. He was leaving a lot of money on the table. Let's double the income, right? So that's our goal, is to get it to this point. And, remember, we're just cash only. So we just paid $1 million cash. And now here's the refi. You can go through and you can look at all this. This is all here. See, this is the estate. This is the improvements and stuff. And then we're right on track. This is where we're at, so. And months after, so the refi, so months after ownership, 18 months. We're going to refi this out. We're running it at a 7 cap at the refi with the 65% LTV, the origination fees there. And then so when we refi it out, we're going to get almost $1.6 million. So that money will be redistributed to that's what how we're running the numbers is like, we're going to give that money to the investors. Okay, so we'll share $1.6 million with everybody. All right. And then with all of our fees taken out, and then after we sell it, right, 54 months, we're going to hold on to it. That's the year long, that we're going to hold on to it. I'm sorry, the 5 years that we're going to hold on to it. And then we're going to sell it at disposition and make another $1.4 million. And then that money will go. And so because of refining it out and taking this money out and then refining it and then selling it and taking this money out, that is what creates such a high IRR. That's why you see this 84%, if that makes sense to anybody, hopefully. Okay. Now, if we don't sell, let's just say that we sell Mission Self-Storage, we sell Blairsville, but we hold on to Max. Right now, we're running these that we're refining them out after 18 months. All right. So all of them are actually, we have months is that 24 months for Max. So I asked for 2 years on that one. Between 18 and 24 months, we'll refi these out, depending on how the market looks, right? Because we're running it at a 7% interest rate. So we're only going to be refining it out if we could be at a 7% interest rate. So keep that in mind as well, too, right? So if we're 10% in 18 months or whatever, we're not going to refi out. So we'll just sell the properties is what we'll do. So that means that your IRR is going to be around what the IRR is, which is 19%, 20%. Okay. Does that make sense to everybody?
So the IRR is based on not refinancing. Did I understand that correctly?
The IRR is not refinancing, and this IRR here is with refinancing.
Got it. Okay.
Got it. Okay, good. Yeah, that makes sense to everybody. And actually, I told Adam, I was like, we gotta label this to where it's refi. We're gonna do another section right here that says IRR non-refi, and it'll be 24%. We're at 24% right now is where we're at for the non-refi. Okay, just so everybody knows. And so really that's kind of how we're looking at these deals. And as I said, you're giving me enough money to buy, 6 deals or 7 or 8 deals. And a lot of things are going to be happening over the course of the next couple of years. And it's going to be based on where the market is, whether or not we're going to refi or we're going to just, once we stabilize the properties, we can just sell it off and just give you all distributions as well too. Okay. And that's really kind of how we're looking at it. Any questions on that? So you guys will have access to this financial model. So highly recommend that you download it. You cannot get in and change any of the formulas and stuff. This is not for you to get a free financial model. This is for you to look at our financial model and to run your numbers based on our model. Okay. Makes sense? Okay, good. Any questions on that? And then what I'll do is I'll get into, oops, we got lots of questions here. Good. Oh my gosh, she's got so many questions. And she's asking, how do you determine equity stake for each investor based on their contributions? Yeah. So whatever amount of money that you put in, you saw that in the financial model right here, is right here, whatever amount of money that you put in and then whatever date that you put it in, those are the 2 determining factors of what it is. So if you put money, if you were the first person to put money in February, you would have a different look than what you're putting in money now. Okay, so these are the 2 determining factors. So time is of the essence. If you want to make the most amount of money, you should be putting money in now and not waiting until later. But you can always put money, if you put money in now, you can always put more money in later. They're like, oh, I'm making some money. But the more what you put in now is going to basically compound. Okay. And let's see what else. Do you limit the number of investors for each facility? No, so this is one fund. And we are trying to raise almost $8 million for this one fund. And I have until the end of August, September, to raise as much money as I possibly can. And I will buy as much storage as I can with that money. But at 8, essentially, it's like, that's the number, that's the limit. Okay. And yeah, that's basically it. Is that hopefully that's your question.
But there's
Right.
no max, there's no maximum
There's
number.
there's no limit. $25,000 you can put in, and then you can put as much as you want, but there's no limit of however many investors. No.
Okay.
Who is the operational manager? So my husband Pete operates all of our facilities. And I don't know if you came in, Ann, and talked about, if you were here and I talked about that, but there's Pete, and then underneath Pete is Bonnie. Bonnie has been with us for 7 years, and she really kind of manages everything. And her and Pete are like this. And then underneath Bonnie is Christy, who's our marketing person. And then also underneath Bonnie. So Bonnie really kind of manages the whole team, and Pete's more like high level, like, he does the numbers, and Pete does a lot of the onboarding, and Pete's really more kind of hands-on and stuff. So Bonnie does like the day-to-day stuff and really manages the whole team. She manages the boots on the ground people, and she makes sure they all know what they should be doing on a daily basis. And we have 4 boots on the ground people to manage all of our facilities. And then she manages Christy, who's our marketing manager, and she manages Mark and Steph, who are our phone people. Okay. So we have a good team, a very good team. They've all been with us for a long time as well, right? Do you utilize a steering committee to make investment expansion improvements decisions on behalf of the investors? Yeah, so we're not going to be like doing like expansions and things like that. We're just not going to do that. We do quarterly meetings with you guys to give you like the update and from up to date information on what we're doing. But we're not really honestly going to be doing expansions and stuff, because we just don't, that's not what we do. Saying we're getting there and get these things like cleaned up, stabilized, we did get our hands dirty. So we do.
So is there like a set, is there like a cookie cutter plan forward on every facility that's, the same and never changes? Or like,
we have what's called we have what's called the onboarding stage. And the onboarding stage is like everything that you need to get done before you close on the facility. And we have like a checklist and like all this stuff that you have to do. And then once you close on the facility, we call that like the owner transfership stage. And that is like a whole bunch of stuff that you have to do as well too. So like there's like 2 different processes. This is the exact same processes that I teach all my students, right? So stage 1 is finding facilities and getting it under contract. Stage 2 is onboarding that facility. It's everything that you need to do so that on day 1 that you close, you're not like running around like a crazy person. And then stage 3 is owner transfership. That's like letting the owner, getting everybody into the like the system, the property management system that we have. We use storage. And so getting them all in there, getting their contract signed, getting the facility up and running, that takes about 90 days to do that. And then after that, we get into what we call stage 4, which is automating and systematizing your facility, right? So that you don't have to go there all the time and do stuff. So, but if you think about that, we're closing on 1 a quarter. So really Pete's onboarding, closing. Essentially, that's kind of what Pete does. And then in the background, everybody is like kind of feeding into him, all the things that have to get done. So it's really like, I say we're lean, mean, self-storage invested machine is what we are. That's really basically what it is.
Okay, I just know if there were like 10 points that you all make sure that are upgraded for each facility, and then that's like it as far as,
No. Like every facility is completely different than the ones that we buy.
Right.
Like every facility is different. Yeah. Like we're buying like, severely mismanaged facilities is what we're doing. So like everyone has their own kind of set of things. Like, so for instance, like Max is the one that we just closed last week. And that one needs like new doors, it needs like walls put in. I mean, the owner was it's like actually we've never had to like put walls into like a facility before. So that would be like a whole thing that, it's like a new thing. Not that we can't do that, but because you can take the doors out like in the middle of the walls and stuff, and you could take those out and stuff. So it's just a lot of like hands-on, like, and he'll get like Zach and he'll get like his whole crew to come down there and just work for like 4 days straight and just like kind of clean the whole property up. That's kind of what he'll do. So all the boots on the ground people, they'll kind of go out and do their thing at the facilities that they have. But like if Pete needs you there, like everybody comes in and then they all help him to do stuff like that too. Okay, is a future state proposal presented to investors prior to an investment commitment? What does this mean?
It's kind of like the previous question that I asked, if you all say, okay, this is what we're going to do to this facility, you know, so that, but
Oh,
you
we really don't, I don't put y'all all involved in
probably
that.
won't provide
That'd be
any.
like way too many like hands in the pot. You guys be all, now we give you we do quarterly reports, like a quarterly meeting. So we'll give you, like, we'll go over everything that we're doing. But I mean, essentially this fund is like you letting us, the experts, manage the facility is what it is.
Gotcha.
Yeah. Is there a reason why you don't take into account OpEx amounts needed when purchasing OpEx amounts of purchasing? Are you talking about CapEx?
CapEx versus OpEx. So CapEx are your initial investments that have to go into a property. OpEx are your ongoing expenses. So like electrical or.
Oh, no, we look at all that.
Oh, okay. I just heard you say.
Yeah, that's all in the financial model. You can see all the expenses and everything. That's all there. We look at CapEx, we look at every expense, but actually we know our expenses. You know what I'm saying? Like our expenses, we have like our deal analyzer is just nothing but like, it's just formulas. Like we know what things cost because we've just been doing it for so long. So we really like when we run our numbers on the deal analyzer, it's just the formula is what it is. Right. So let me show you if I could show that to you. Hang on.
Yeah, I didn't hear you differentiate between the two. And in my mind, you know, cap would be you purchasing the property versus operational, which is maybe utilities or keeping the lights on type of chart.
That's all. That's there in the financial model.
Okay.
That's all there. So here is if you click on like this one right here, you can see on this sheet, you can see here's the acquisition. Right, and any CapEx, anything else that we need is all right here. Renovation cost is $50,000 for Blairsville, right? That's CapEx. And anything, and then here is our expenses, right here: repairs, maintenance, administrative, monthly services, utilities, advertising, payroll, taxes, insurance, total OpEx right here.
Okay. Yeah.
Okay, so that's all right there. Yeah. Let's see what else. Let me stop share. Okay. All right. Thank you, Kyle. Let's see. Do you have an example of a typical dividend payout report? That's the financial model that we just sent you. Are you talking about the quarterly report or what are you talking about?
Well, I mean, I guess everybody's in it's a 5-year plan, right? So I guess there's only one at one point that would be taken into account, right? At the end or what have you.
Oh no, because like if we like I said here, like on this one, if we refi this out, we will have at the refi $1.4 million, and that will be distributed to the investors. So
Okay.
that's that month. I'm sorry, here's this $1.5 million is around month 18.
Okay.
And then once we sell it, you're gonna have another $1.4 million, and then that will be sold. And actually that is, let me see if I can. Hang on. He's pretty good at putting slides in, but I'm not seeing this. Let's see, hang on. Yeah. He's giving like all the payouts and everything right here as well too. So I would say just play around with the financial model, you know what I'm saying? And just kind of look at it. The hurdles are all here. You know, what you're going to be paid out. I mean, all the numbers are all right here. Okay.
Okay.
And then also here is the distributions as well too. This is the whole this is the model. This is the fund as a whole. And then this is each of the facilities. Okay, let me see. What else we got? Yeah. So you can see all the way through here. I was just trying to see. Let me see. Oh, okay. All right. Okay, what else? Yeah, and then we'll do quarterly meetings and have quarterly reports. So we'll have a quarterly report for all the investors tomorrow. We're going to be putting that out. And then our investor meeting, our quarterly investor meeting for investors is this Thursday night at 6:00. And we're going to be, I'll be sending out an email tonight after this and just inviting everybody to that for investors only. Are you planning on sharing the presentation and financials individually? Yeah. So that is, so go into, it's not coming up. Hang on. Just pull this up. There it is. Okay. So go into the portal. Okay. And then it's not, sometimes Zoom is next weird. Oh, here it is. Okay. So now go into the portal. Inside the portal, I put the portal into the chat. I put the link into the chat, and then you're going to just go to documents right here. And then under documents, you see supporting documents. And then here's where you're going to see, like, this is the first facility that we bought. So the deal analyzer and valuations and stuff. Here's a video of Adam explaining the financial model. Here's the investor presentation. Here's the second facility that we bought. Here's the extension. Here's the subscription. Here is the financial model. You guys all have access to this, and that's where you can download this, and then you can get into the financial model, and you can put how much money that you're putting in, and that will show you how much money you're going to make. Okay, that's what that page is for. Okay. Is there a possibility for a capital call for the fund? And if so, is it detailed in the PPM? I'm always doing capital call. Like, I'm doing capital calls, commitment, all up and from now until the end of August of next year. I need to raise as much money as I can so that I can go out, but I don't do like a specific capital call. So what I do is I just, like, every Monday I'm pitching. And if anybody's interested, if you're interested, then you're more than welcome to invest. If you need to talk to me one-on-one for any reason, just email me at, it's the questions@stacyrossetti.com. And then we can do like a one-on-one as well too. So that's that. But there's no like specific capital call. I'm just continuously every week raising money so that I can go out. Because so we have another facility under contract that we want to close in January, and that one's going to be about like maybe it's $1.4 million is what it is. So I need to raise that much money too. What happens if one of the LP managers removed from participation due to unforeseen circumstances? All right, yeah. So that's explained in the PPM as well too. But one of us will, I guess Pete or if I die, then Pete would be the one that kind of manages everything until the end. And then and also in the PPM, it just says, like, it's up to the manager's discretion to just like say, okay, like, I'm just going to go ahead and sell all the facilities and distribute everything. Right. But really a lot of the PPM says it's really kind of up to the manager's discretion. Okay. What else? Is there a possibility for a capital call? Oh, no, we already did that. Sorry. That's it. That's all the questions. Anything else? Any other questions? Did I miss something? Any other questions that I missed? Okay, good. Well, let me just get real fast into the portal so I can show you now. Once you get into the portal, you get access to the PPM. And then you want to make sure that you upgrade to investor status. And investor status gives you access to the subscription. Okay. And this is where it says, like, step one is the subscription. Subscription is the contract between you and the fund, really is what it is. And then you just choose if you're going to do the individual plus spouse is also under individual. And then the custodial is where you want to bring it in from like 401k or something like that. And then the entity is like, if you want to put it under entity, obviously. So you just pick whichever one. If you click on this, it's going to take you to DocuSign, and it's an electronic form, and you could just go through, read it. And this is where you put your bank information in there, right? And this is where we're going to have this. We give you, Adam gets a copy of this, and then you send over your accreditation letter. That's step 2. Right. And then step 3 is you can just click on this, and this gives you the instructions to wire the money over. Okay. Yeah. And that's really the step-by-step process, right? You can scroll down here and see all the documents. You can see all the news, and just kind of play around with the portal. Everything that you need is here. This is how we speak to all of our investors outside of the the quarterly investor meetings. Or like I said, you can always go to questions at stacyrossetti.com. I'm gonna put that into my chat too. Questions at stacyrossetti.com for if you would need to talk to me for any reason. Okay. And we can hop on a Zoom meeting. Okay. Anything else that y'all can think of that I didn't go over? Okay, good. Okay, well, let's see. Wayne just came on now, and unfortunately the session is over. So Wayne, just so you know, the session is over, but this will be recorded, and I will send out the replays to everybody as well. Okay. And then that way you guys can watch it and ask me any questions if you need to. But I look forward to meeting you, working with you, and I hope we can work together. Okay.
Thanks,
Take care.
Stacy.
Bye.
Thanks,
Take
Stacy.
care. Bye.
Bye-bye.
Bye.